Hello everyone and welcome to another edition of Bleeding Crypto's Market Update. Today is Sunday, March 12th. Boy, you guys are getting a lot of updates lately. Well, a lot of stuff going on in the market. So again, I was going to make these videos every 2 to 3 days, but being that there's quite a bit of movement going on at the market, I want to keep you guys informed, keep you up to date. Again, I'm trying to grow my YouTube channel, so I would appreciate if you guys could just hit the like button. Guys, that'll help the algorithms propagate my content out. As people search for this type of content, it'll the more likes that I get, the more it'll show up on other people's searches. So if you can hit the like, guys, that'd be a great way to support the channel. So let's go ahead and start off with the chart that I told you guys, a continuation chart. So this is the continuation from the video I did. I think it was just yesterday was the latest video. So let's go over the game plan. When I made this video, we were on this candle right here. We had talked about two possibilities. I told you guys for the bear case, we may see something like where we break out of this. We had this weak bear flag breakout with the confirmation, and that's why we were here. We hadn't done anything yet. So I left these notes here. To the downside, if we break bear, did we break bear or did we confirm the W? That was our two scenarios. Either the bear or the bull case. Now, I'm going to remove this comment because we did confirm the W. So let me remove that because that was basically a statement. If or this one way or the other. And I'm going to explain to you what we kind of do a recap of what we covered on yesterday's video. I told you guys that this is a bullish pattern. This is what I call a W, also referred to as a double bottom. Now, a double bottom generally breaks at the peak of the left side formation. So I chose this one here, this move here as the top of the formation. And I put this red box as our resistance area. However, if we go to a higher time frame, I guess what I failed to do, I could have pulled it off of somewhere a little bit higher here because this is all a continuation of that drop. And like I said, typically it ends at the beginning of the left side. So I did not map this out correctly. I should have went to a higher time frame for the actual beginning of that. You can, as you go higher, you can really see where the beginning of that drop is, and we did end pretty much at the end of that there. Now, even if we're going off of here, just say we're going off of here, we are still within a key area. So let me explain what I mean by that. So we did overshoot where I had drawn my box. However, we are hitting the top of this long resistance channel that we put on the 4-hour time frame. So this isn't just a couple of hours. Each one of these is 4 hours. So this basically went on from the March 3rd to March. So for 5 days we were stuck inside of this resistance channel here. Now there's another thing that you guys hear me talk about quite often, and it's called back testing. I am a very big proponent of back testing. I see that happen all the time in crypto. When we lose a support level, we come back, we back test it. When we when we reject of a resistance area, we come back and we back test it. When we break away of a EMA, we come back and back test it. Look at what we did here. We broke the 200 EMA, which is a large area of EMA, which held as support. We broke it and we never back tested it until now. So you can see the confluence inside of this area. We've got the 200 EMA. We've got 5 days of resistance. Had I mapped this out correctly and looked at the higher time frames, I would have seen that this here was the beginning of that left side of the W. So we got very close to it. Again, this was my mistake. I did this a little too low. However, we still hit it. But it would have been just much cleaner had I just taken the time to look at the higher time frames, and I would have mapped it out a little bit cleaner. But nevertheless, here we are. So what now? Do we continue? Honestly, guys, I don't think we do. Now, there are convincing things. So we're going to give a case for both sides. Number one for the bulls is The volume. The volume, we came up with very strong volume. This wasn't weak volume. This wasn't declining volume. We broke through all of these candle bars that were descending. We came through and we came in with 4. Let me erase this. We don't no longer need this, and this no longer applies. All right, so we came in with very strong volume. So that is definitely a plus for the bulls. However, there is a couple of things that we're going to have to pay attention to if we're going to see continuation. Now, this pattern, like I said, I play it very often. I refer to it as a W flag breakout, meaning that we do a W. Typically, we will do a flag and then a breakout. So the flag pattern will come down into the 9 EMA. A lot of the times we'll see a wick to the 30, and then we continue up. I imagine this is going to take some time. We're not in the bull market. We're in a bear market. So if this is going to do that, this is the 4-hour time frame. So we're going to spend some time here. We're going to be declining in here. We're going to allow the 9 EMA and the 30 to catch up in here. It'll be quite bullish as we're going to be crossing from the underside of the 50 EMA, causing that upward pressure to the upside. If we obviously upward pressure to the upside, I can't believe I said that. Anyhow, we are going to we would see a flag and then a continuation. So that's the pattern, the market structure that I would want to see, or the better said, that I would expect for a move to the upside. So this is something, let me map it out like this. It would be something probably about right here. You know what? I don't like having too much stuff on my charts. Now that I'm doing this live, I'm going to erase this live, and I'm going to erase that as well live. I don't want to crowd the charts with too many charts. So, and I want to use an arrow. So let me do this. Let's erase this first, and I'm going to put my fib in on 382. Give me 1 second here on this move. We're going to go here. Continuation rule. Oh, it lines up. It lines up perfect with that too, huh? What do you know? I love when this stuff lines up. But I didn't even know it was going to line up, and yet look at that. Right there. That's what I was expecting this here as a support. It lines up perfect with 382. Everything is lining up to that W flag breakout if that's the route it's going to take. Now, but I'm going to give you both cases. So we're going to go back, and more likely we'll see resistance back in here if this is the path it's going to take. Do I believe? What scenario do I believe the most? Remember the last time we did the video, I told you I was a 70% chance where this was going to play out versus 30% chance. This is why it's important, guys, that you watch the previous videos so that you can hear me say the things that I say. So when I do say them again in later videos, you're not just saying, oh, he's just making that up. No, I said 70. I gave a 70% chance for a W, a 30% chance for the bear break. And look, now this pattern here, honestly, I'm going to flip it now. I'm going to give this a 30% chance of happening. So what am I giving a 70% chance of playing out? Okay, well let's talk about the bear scenario. I'm going to erase this fib. The fib was there basically just for that measured move, but I found confluence with this area here where I was going to draw my original arrow. So the fact that I found confluence, I'm going to go ahead and erase it for now. That's typically what I see is that 382 for the flag, for that continuation. The fib did its job, so I don't want to have it again. I don't want to crowd the chart. I really want to keep it as minimal as possible. All right, so to talk about the bear case, I'm going to have to go into higher time frames because there's a bigger picture that we need to look at here. There's a bigger picture that's involved that's going to, in my opinion, dictate the move to the downside and why I would expect more move to the downside. Before I do that, I want to go to HyBlock real quick, and I want to refresh this because this. So look at this here. Take a mental picture of this, or take a screenshot, if you will. And I've been posting these, and I've been talking about these. And look, we hit that liquidity. Remember this liquidity here, this area here where the market makers would gain some liquidity. So how this works, guys? So there was a gentleman that I follow and follows me as well mutually. He corrected me as far as saying that this isn't real liquidity. This is the area where basically the way it works, guys. I call it liquidity just for the sake of the video, just to simplify it. But his explanation was 100% correct. So I'm not disputing what he's saying. I'm just telling you that I call this liquidity for the simplicity of it. What this actually represents is this represents contracts. So this represents contracts, and this represents a number that if the price action reaches this number, those contracts will then have to pay out. Well, basically, the guy, the trader, the retail on the other end is going to lose his money. Is the easiest way, and the market makers will gain. Simple as that. There's always two losing sides. The winner and the loser. More often than not, the losers are retail. In this case, that's exactly what it is. Whoever opened the contract, this was the point where they get liquidated, where they lose out on the money they betted. So that's why simplicity, I call it liquidity. But if you want to read his comment and the way he explained it, that's exactly the way it works. So I want to give him props for that. And I know he wasn't trying to criticize. He was just trying to explain it a little bit better. And that's how I took it. There's no harm. I totally respect he's a good trader. I respect his analysis as well. That's the reason I follow him. So let's refresh this, guys. Let's refresh this. Let's look and see what what I want to do too. I want to include all three. So we'll have an aggregated view of what happened. So this is a 12-hour time frame. So where we were before I refreshed the memory, refreshed the chart, was right here. Now look at what we did. See how we're just climbing, and we're climbing into that. We're gravitating into those areas of liquidity. The market makers are going after those contracts that will basically represent liquidations. See how we're gravitating to that. Now, that's not to say they can't do that to the downside. There's quite a bit to the downside. So this is just a visualization of where those contracts lay. They're not a roadmap to a direction of which way the market is going to definitely go. No, not at all. This doesn't dictate that we're going to go up or we're going to go down. It just gives you a visualization of where those contracts will be liquidated and where the market makers gain the most amount of money. So that's kind of what that's for. Now, let's go back to the chart and let's talk about why do I give it a 70% chance that we're going to continue down versus a 30% to the upside? Why did my ratios flip from this morning where this was 70 and this was 30? Okay. Well, to do that, I'm going to have to look at, I'm going to go to the daily time frame, and I'm going to do this, guys. I guess I'll leave that there. Let's do this. Let me at least erase the indicator. Let me hide the indicators. Again, I don't want to make this too confusing. All right. We are on the way down. This is what we're doing. We are basically putting in a high, low, lower high, lower low, lower high, lower low. All we did is come up here and meet resistance. As I showed you, we back tested the 300. We back tested the bear break of the 200 EMA. We came right back up into the left side of the W, double bottom. We hit prior strong resistance and support. If I snap a line here, I'm not going to. Well, I'm going to snap it temporarily, and then I'll remove it. Actually, you know what? Let me use this one here. I'll borrow this one. This way, I don't have a lot of extra lines. Here's the resistance. Here's the beginning of the left side of the W. If you go to the left, support. All this is support. This was resistance. You see that? See how the TA just works out beautifully. So I like the fact that we hit that area of prior support, which is now resistance. We confirmed it once again on this move here. There is nothing here, guys, that says we are reversing. We're going to a bull market. There's a lot of negative news that is Some of it is crypto related. A lot of it, the majority of it, is broader market related, like the banks, the insolvencies, the back runs. There's too many things going on in the broader markets that tomorrow, come the opening bell, could affect the markets dramatically. So we're in no position right now to look at this and say, yeah, we're going back to all-time high. This is the beginning of the bull run. Not at all. I view this as a back test, nothing more than that. I like for the market to prove it to me that the bull is in control and the bull market is here. If the bull can prove that to me, then yes, I will accept them. However, this area here was yet again another indication that the bear is still in control. It goes back to the videos that I've been making the latter half of last year. Prove to me that we break this this downward trend and we're going into an uptrend, and I will give you the credit that the bulls are back and we're going to new all-time high. And the line in the sand was here. I talked about that at least 100 times in the past 6 months, and guess what? We did not break it. What did we do? We put in a perfect bear pattern, market structure, tweezer top, double top, follow through. It's just one pattern after another that the bears are proving to the market that they're in control. The bear doesn't have to go straight down. Markets do not work that way. Just look left. When we broke down here out of this 25, did we go straight to 15,500? No. What did we do? We dropped, we bounced, we dropped again, we bounced, we dropped again. This is our first pump from confirming this double top, this bearish, this reversal, if you will, reversal from this move here, market structure. So we're basically right here. That's where we are right here. This move here is basically this right here. As a matter of fact, you know what? Let me measure. Not that it matters. I just for my own 16%. What was this? Where are we? We are right here. 15. We're literally 1% away. 1% away. If this shit doesn't just blow your mind the way TA just works out, guys, and how, I mean, just the way things repeat themselves, it's just incredible. I know people say, yeah, markings don't repeat themselves. They often rhyme. Yeah, blah, 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 blah. Yeah, fuck you. This shit looks almost exactly the same. So I like saying they repeat themselves, but they really don't. But they sure hell look very, very similar. The way they behave is just so similar. So yes, okay, technically they don't repeat, they rhyme, but goddamn, they rhyme very, very close. Off by 1%. That to me is very, very similar. And there's nothing in the charts that can win an argument for the bull simply on this move. Again, we pull back, we break out. We break out above 25,200, and we find acceptance in here where we consolidate, we pull a bullish market structure and a continuation, no problem. Bulls showed it, proved it to me that they are worthy of my money. But until then, absolutely not. I understand that we don't go just straight down in an arrow. We have a series of lower highs, lower lows on a downward trajectory, exactly the way we did here. We put a high, a low, lower high, lower low, lower high, a low. We attempted to reverse the trend. We failed. We confirmed it. Absolutely perfect. Tweezer top reversal with confirmation. Now we put in our first higher low. No, excuse me, lower high. We put in our first lower high on the weekly time frame. That's basically all we did. So as of right now, I'm going to be looking for what? A lower low. A lower low will, in my opinion, come into into play right here at 18,400. That is the next level of very strong support, resistance, neckline. There's a lot of confluence in this area here. So I am giving it a 70% chance that the next move, not right away, it's not going to happen in a day. We're looking at the weekly time frame. Okay, guys, we're looking at the weekly time frame. So you got to let this stuff play out. It took 3 weeks to get here. This is not going to happen Thursday, and then that's it. We're going to continue. The market is not in a hurry. Always remember that. I tell this to my students all the time. The market is not in a hurry. Only you are. The market is not in a hurry. Only you are. Always remember that phrase. Everybody wants this to happen fast, fast, fast. No, the market doesn't have to. The market has all the advantage. The market has all the money. The market has all the liquidity. Why would they be in a hurry? Why not cause you to hurry, to make bad decisions, and when that in turn, they take your money, right? They are calm, they're collective, they have a game plan, and their game plan is to take your money. What's the easiest way to take your money? Make you emotional. How do they make you emotional? By taking their time, purposely. They know that the more time that they drag something out, the more impatient you're going to get. And you're going to either want to, let's 50x to the top side. No, let's 50x to the down, to short 50x. Let's long 50x. Every day on Twitter, you see how the sentiment flip-flops. They're doing their jobs absolutely, perfectly, correctly, exactly how they planned it. You are falling exactly into their plan. So, looking at this here, nothing until the bulls can prove it to me, until they can break this here, all we did here is put in a lower high. Now expecting a lower low for the downside move. Now, when we do that, let's look at a fib, because that should line up to, let's put here. Let me go into here. Let me put my reload zone right there. Okay. 706. One of the levels that I like to use, 706. You know what? I'm actually going to put a traditional fib, just a traditional fib for now, just so that we can have the different markers in there for people. Again, this is I want to try to help people understand how these fib work. Really quick recap. I've said this before, and I'll say it again. There's 3 different fib entries that are not technically in the Fibonacci sequence. 0.50 is not in the Fibonacci sequence. It's often referred to as the Wall Street fib level, the 50%. There's also, I believe, the GANs 50%, and there's other names for it, but this is not part of the Fibonacci sequence. However, it works out more often than not. It's utilized by many traders, and so I keep it as part of my fib sequence. 706, same thing. The 706 was introduced to me by a mentor of mine that helped me grow as a trader, Chingus X. Many of you guys might remember him. He's not as active as he was in the past, but nevertheless, I never forgot all the stuff he taught me, and he introduced me to this level, and I use it to this day, and it's super, super accurate. And as you can see, look how well it lines up. Look how well it lines up to the neckline break. Think about this, guys. Think about everything that needed to happen, all the money that needed to happen, the rejection, everything for this to line up right on the fib, right on that fib. It's amazing the way fibs work when you utilize them correctly. Now, 786, that is part of the Fibonacci sequence. 886, no, it is not part of the Fibonacci sequence. However, this is a level where institutions like to buy. They like to buy 88% on the dollar. They buy wholesale. You buy retail. You buy this. You're trained to buy this, retail. Market makers, institutions, they buy pennies on the dollar. 88%. This is their levels. So this is why I have this on my Fibonacci sequence tool. So now I am looking for support which now I found confluence with a very useful Fibonacci entry that I have. 706 lines up with my neckline, lines up with prior support, with prior resistance. So this is where I'm looking for the move to the downside. So let me do this. Let me go to the daily. Those arrows, okay, good. This way I can define those arrows. So I'm going to leave these arrows in yellow, as yellow representing caution, meaning that I'm only giving this 30%. And what I'm going to do here, I'm going to write right here, just right on top of here, just for, again, for notes, 30%. 30% probability is what I'm giving this scenario here. Right there. And the scenario of us coming down, now I'm going to put this here as far as us going down, right here, going down here. I'm going to put this as I'm going to put this as red, because I'm going to give it, excuse me. No. Okay, I'm going to put this as red because I do believe that this is what's going to play out 70%. So I'm going to utilize the red as a downward. Keeping in mind, let me do this here. Let me shrink this. Let me shrink. Oh, too much, too far. That's good enough. I'm going to write 70%. 70%, and I want to talk about something else as well. 70%. Now, as I draw this, again, okay, as I draw this arrow, this does not mean that we are going to go straight there. There is, on lower time frames, there's going to be a lot of up and down to eventually end up here. As the higher the time frame you go, obviously it'll look much cleaner. So if you look at a hourly time frame, you may see the route like this, choppy until it gets there. On a weekly time frame, it may be represented as one weekly candle. If it takes a week to get there, obviously it's going to be a lot of chop on the lower time frames, unless tomorrow's market opening is really bad and the market's tank, then yeah, obviously then we would see an hourly, a 4-hour candle straight down. But that's not normally how we see these markets come down. We normally see them in the high time frames as big long candles, but on the smaller time frames we see all the chop that occurred inside of that larger time frame candle. Hopefully that makes sense. So this is the probability that I'm giving it now, guys. 70% down into these areas here. I am not going to start telling you about testing the lows, putting in new lows. I don't want to get ahead of myself. We talked on the very first video. I gave you a macro view of what I'm expecting, what I'm looking at, some of the probabilities where it can go up and down based on the TA, based on history. We covered that already, and I told you I want to keep these to local moves. This, to me, is a local move. We have now an area here, which I already made my case for the upside. I think I've made my case very well for the downside, and now it's just a matter of letting the market play out. We have a new week. Today was a new weekly candle. We have 7 days to that candle. For 7 days for something to happen within that candle. Could it go sideways for 7 days? Yeah, absolutely it can. But with all the turmoil going around in the market at the moment, with these insolvencies of these banks and these possible bank runs, it could be a very volatile week. So the likelihood of it just going sideways, probably not too likely. More than likely, in my opinion, we're going to see one of these two play out in this next week. I'm not going to wait a week to update you guys. Obviously, I've been doing a pretty good job, I think, of doing these a little bit more consistent. So let's just say, let's wait for Wednesday. I think that's fair. Today is Sunday night. Wednesday, I'll give you guys an update. And by Wednesday, halfway the hump day, halfway through the week, I think we'll have a better understanding of where we're at. Did this flag out and start its move to the upside, or are we starting a move Did we break the 382 continuation, like continuation rule for the flag pattern off the W? And are we now heading into this area here? We'll have a little bit, hopefully we'll have a better understanding of which direction it took. And if it does take that direction, we kind of understand why. This is a typical pattern off of a W, so that's why I mapped it this way. And obviously, because of all the turmoil, this is where I'm expecting for a new lower low off of this lower high, that a double lower high, almost basically a double top. But I don't really call this a double top because the structure isn't there. This to me is a better defined double top. The way we saw it, actually, this to me is a better defined double top. Look at this double top here. When it's defined like this, when you have two candles side to side, and obviously it's gonna look cleaner on the higher time frames. On the lower time frames, not so much. But you guys get what I'm saying. This here with this little V here, this to me is just, again, a back testing like I talked about in the beginning. I don't view this as a double top. Well, technically it could be. Maybe textbook did it. I don't know, but I don't consider this a double top. I consider this, just a failed break or a back test break of that breakout, but I do anticipate a lower low coming in by the end, hopefully by the end of next week. It may take longer, but this is the route that I'm looking at as the next probability. All right, guys, I hope that was helpful. Please hit the like button, guys. I've got some affiliates that I work with. If you can look at the comments below the video, it'll give the links to those. That'll help you out. It'll help me out. If you choose to go that route and utilize them, great. I'd appreciate it. Other than that, guys, I think we're pretty much it. I'll do some updates on Twitter and kind of keep you updated on how things are looking. But for now, let's just wait. Let's be patient. Let the market digest this information as far as what's going on with broader markets. Is the government going to come in? Are they going to put a backstop like some of the articles are saying over the weekend? I can't imagine those articles are very accurate, as the government's closed. They're not working on Mondays, on Sundays, so I don't know where they're getting that information from. Is it just they're just making it up? They're hoping. I don't know. They got to sell content. I don't know what it is, but I would rather get that news on a Monday during business hours than on a Sunday afternoon when I don't think governments are out there, unless they are. I don't know. I don't work for the government, so I don't know. But I would imagine they're not. So I think any information that comes out during the weekend, I'm going to be a little bit more suspect. I'd much rather wait for the confirmation during regular business hours on Monday morning to see if the banks are actually going to get that. I wouldn't call it bailout, but some sort of assistance. We'll call that assistance for now, and see what happens. The market will react. Obviously, it's going to react to that, whether it's positive or negatively. That's what the charts tell us. This is a measure of human emotion. Always remember that. These charts show you dopamine, and they show you the fear. They'll show you all the happiness, the greed, the hopium is always reflected in green. And the bears, the tears, the blood, the fear, all that is reflected on these red candles. That's the best way for me to describe the markets. It's a measure of greed, happiness, hopium against fear. All right, guys, have a wonderful rest of your Sunday, and we will be in touch this week.